This is your LMAX Exchange technical update for Tuesday, July 11th, 2017. Euro dollar. So we're in a bit of a holding pattern with the euro right now. The market's come up to some resistance, some critical resistance, some longer term resistance going back to 2015, but there's still room for this market to push a little bit more into this resistance zone between 115 and 117 before there's any expectation that we see the market roll over in adherence to what has been a range trade since going back to 2015. The important takeaway right now is that while we have been in a very intense uptrend in 2017, when you pull back this chart to 2015, all you see is a range trade with the market coming up to the top of that range. And so it's natural to think that the market might stall out again, at least even on a minimum on a short-term basis in favor of a significant reversal to the downside. And so we're waiting to see if the euro can make that one more push higher before it considers rolling over and bearish resumption off that top of that range high. Right now, key levels to watch above and below come in at 115 above by that psychological barrier, and below you're looking at the previous weekly low, which comes in just over 113 at 113.13. A break on either side or a test of each level will be important to see for a clearer directional insight. If we break up towards 115, then it'll be important to start to look for the market to stall out. A break, however, back below 113.13 would suggest that the market could actually be topping out right now in favor of that bearish resumption and adherence to this longer term trend. It would be considered to be premature at this point to suggest that the euro is putting in a longer term base. And while that is possible, we would really need to get back up above that 2017 high and clearly above it at 117 to lend support to the case of a longer term euro bottom. Until then, there's this expectation that the market should look to at least stall out as it gets up into the 115 to 117 area. Sterling dollar. So cable has seen another rally up recently towards that 2017 high that was set in May at 130.50, but the market hasn't been able to establish above that level and instead has deferred to this period of consolidation ahead of what eventually will be likely that next major move to the upside towards a measured move extension at 135. But again, for now, we could see more choppy consolidation roughly between 125 and 130 before the market makes that push higher. Again, when you look back, the market had based out at plus 30-year lows in October of 2016 at 118.40 and then consolidated for several weeks with that range resistance at 127.75. But the breakout in April above 127.75 set the stage for a longer-term bottom, opening the door for an eventual push higher towards the next key objective at 135. But on a short-term basis, we still could see this choppy trade. Dollar yen. So dollar yen is going to be interesting over the coming sessions. The market is back up towards some key resistance, that previous high at 114.37 going back to the 10th of May. And when we get up here into this level, it'll be interesting to see if the market can hold up here and break and continue to break higher, which would be a significant bullish development, or if we stall out somewhere above 114.37 and in the 115 area in favor of a resumption of a more defined range trade over the past several weeks. So pay attention to dollar yen on Tuesday to see how the market responds to this resistance at 114.37 and whether or not the market is looking to hold above, or if we're going to see another topside failure ahead of a resumption of declines back down towards a retest of the 2017 low just ahead of 108. Euro Swiss. So Euro Swiss is getting a little more interesting after some consolidation and the market being well capped below 110. We've most recently seen a break to fresh 2017 highs above the 110 barrier, and this could set the stage for a push up towards the 2016 peak at 112 in the days ahead. However, this is a market that has been very well capped into gains, and so how it responds over the coming sessions will be interesting to watch to see whether the market stalls out again up here in the 110 area in favor of a resumption of a downtrend back towards the 106.20 2016 base. Aussie dollar. So Aussie has been very well capped into rallies over the past several months towards 78, and we saw this again recently with the market stalling out above 77 at 77.13 about ahead of this latest pullback. This pullback could end up setting the stage for a more significant resumption of declines back down eventually all the way to retesting the lows from 2016 from December of 2016 down around the 71.60 area. Dollar CAD. So dollar CAD has seen a 10 big figure drop since putting in a 2017 high around 138 back in May, with the market collapsing all the way down towards 2017 lows towards 128. So far, the latest setbacks have shown no signs of reversal, but overall the longer term chart is still more constructive, and so there is risk between the constructive longer term chart and some overextended daily technicals that we do see a reversal of some kind over the coming sessions. Look for a break back above 130.15 to strengthen the outlook and resume the pressure to the top side. Inability, however, to do so will keep the more immediate downside pressure intact. Kiwi dollar. So the New Zealand dollar is another market that's been range bound over the past several months, and so this latest rally up towards the 74 handle is stalled out again, with the market this time stalling ahead of the 2017 high from February at 73.76. This could set the stage for another breakdown and range resumption back towards eventually the 2017 lows that we saw back in May around 68.20. SPX 500. We continue to say that the S&P 500 is needing to break back below 2,400 to take the immediate pressure off the top side, and despite the consolidation or exhaustion that we've seen over the past several sessions since the market put in that record high back on the 19th of June above 2,450, the market has mostly been consolidating and has not been breaking down, which still keeps the overall pressure on the top side while it holds above 2,400, which could open the door for that next extension to a fresh record high at 2,480. Again, we would need to see a breakdown below 2,400 to force a shift in the structure, or at least take the pressure off the top side and potentially open the door for a structural shift. Gold. So gold has ended a sequence of higher highs and higher lows that had been in place for the past several months, and the breakdown warns of the possibility for deeper setbacks and maybe a more significant bearish resumption in the days, weeks, and months ahead. At the same time, if gold can be propped up and hold above 1200 and break back above some recent resistance in the 1230 area, it would suggest a false break to the downside and the market willing to want to putting in another higher base here ahead of a resumption of this uptrend back towards a retest and break of the 2017 high just shy of 1300, which would then expose a retest of the 2016 peak at 1375 further up.